Hi, my name is Alan Miltz, and today I'm with my co-founder at Cashflow Story, Joss Milner. Joss, we've been working together now for over 30 years. We've developed techniques, we've brought products to the market, Optimist, Profit Optimizer. Our systems are used in over 30 countries. Why did we develop Cashflow Story?
When we sold out a few years ago, we watched the accounting advisory market. We watched other products come into that market, and we saw that everything was complicated. What we realized is that it's all about simple. What we wanted to do with Cashflow Story is to develop something simple that would enable an advisor or an accountant to have a structured way of looking at a business, a way of talking to their clients so that anyone in the organization could talk to any client, tell them the same story from the same set of numbers.
So, Joss, what type of clients is Cashflow Story aimed at?
That's a really good question, Alan. All clients. If you look at a typical advisory accounting practice, they could divide their clients into two groups. Let's call the one group the clients who care, and let's call the other group the clients who don't. The clients who care is unfortunately the smaller group. They're the clients who are actually interested in their numbers. They want to improve their business. They want to learn. Those are the easy clients. Those are the low-hanging fruit, the people that want to be involved in this sort of stuff. Unfortunately, more clients fall into the second category. That's a category of the typical business that says, I don't really understand my numbers. What's the point of financials? Balance sheets are confusing. I just want to make things. I just want to sell things. The whole beauty of what we've done with Cashflow Story is we've produced a product that works for all clients.
So, Joss, Cashflow Story, applicable to all clients. How do you use Cashflow Story for the sophisticated client?
Well, in this case, it's pretty straightforward. You start by taking 3 to 4 years of historical data and loading that into Cashflow Story. So we just input around 15 numbers, and those numbers are readily available. They're in the account. So it's simply a case of saying input, 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 no thinking. Anyone in the organization can throw them in, simple stuff. You then would walk through the story of the business. We've created a structured approach so that you can look at the business in a standard way, which we call the 4 chapters. Chapter 1, profit. Revenue growth, gross margin, overheads, things that you tend to look at and most businesses seem to understand. Chapter 2 is where it gets a little bit more interesting. Chapter 2 is our debtors, accounts receivable, our stock or inventory, and our payables, creditors. Those are the key parts of the business that often is not understood. Once we've looked at Chapter 2, we move to Chapter 3. That's the rest of our balance sheet. Some businesses have a Chapter 3, fixed assets, investments, etc. The results of Chapter 1, 2, and 3 come out in Chapter 4, which is our funding. Did Chapter 1 generate cash? Did Chapter 2 take that cash away? How does it all result in Chapter 4, funding? Did this business need to borrow? Did this business need to put money in?
And Josh, do you find that customers or clients or firms understand cash flow?
Not at all. That's why the understanding the 4 chapters enables us to explain to these clients why they're profitable, but yet their cash is so bad. Why is my business growing? Why am I making money? Why do you keep telling me I'm profitable? Why am I paying tax? But yet I've never got any money in the bank.
And interesting, Josh, do you think accountants have been good at explaining cash flow to business?
No, definitely not. What this is about is making it simple by understanding the elements of what drives their business through Chapter 1, profit, Chapter 2, working capital. That is really the essence of it. So Cashflow Story enables the accountant to become a storyteller. Once we understand the story, it's all about what are we going to do about it. And we do that through the power of one. We really call the power of one the code of the business. What that shows us is the impact that a 1% improvement has on the cash and profit of the business. What does the 7 key drivers of price, volume, cost of goods or direct costs and overheads have on cash and profit? Likewise, what does 1 day improvement in Chapter 2 working capital? What does a day off our receivables, a day off our stock, or a day's extra creditor do to our cash flow?
Josh, it sounds pretty simple. I mean, companies sometimes can change a 1% and it can have a dramatic impact on the business. Do you find when the accountant goes over or the advisor goes over the power of one, how do clients react?
Well, extremely positively, because often they're saying, oh, I could do that. I can take 1 day off there. I could put my prices up 1%. How often do businesses talk about price increase and they're looking at what will 10% do? In realities, have you considered 1%? Businesses say, if I put up prices, I lose volume. Cashflow Story will show what that volume loss can be to still maybe be ahead. Maybe you're going to put prices up 1% and lose 3% volume and be ahead.
So Josh, am I correct in saying that by implementing Cashflow Story in the advisory practice, it's a very simple process? Step 1, enter your data and then produce this very logical process to discuss, which obviously every client is saying, please tell me, accountant, how to improve my business.
Exactly. So that's really for a sophisticated client to be able to get them to understand what's actually happening in their business and what they can do about improving.
So Josh, what would you do? You mentioned the majority of clients aren't really interested. How do you treat people like that? How do you get them involved in this process?
Well, the key thing is that sort of client is not interested in going through their story. So they don't want to know why. What they want to do is improve their business. So what happens for those sorts of clients is we basically look at the story as an advisor ourselves, but we don't share that with the client. We start and finish with the power of one. So we sit down with the client and say, let's have a look at how you can change your business, how we can get the bank off your back, how we can improve your profit, how we can improve cash, how we can make you take more out of your business. That is going to get any business's attention, showing them how they can improve.
And just logically, the power of one sounds like such a simple concept. Whether you're a financial person or a non-financial person, this is gold for you to know how to improve profit and cash.
Exactly. Who doesn't want to know what 1% price increase will do to their profit and cash? They don't need to necessarily understand why or understand the drivers of cash. They can simply be shown what the benefit will be.
And then, Joss, I would assume the same occurs. People would say, what's the relationship of price to volume? You know, which one's more sensitive to my business?
Exactly. So what that gives the advisors the opportunity then maybe to go and show that client one graph or one piece. Maybe they'll show them chapter 1, show them that every time they increase their sales, but they're increasing their overheads by more. Maybe they'll show them an element of chapter 2 without going into too much detail. That client is now getting advice from their advisor that they've never received before.
Now, the $1 million question, Joss. Every accounting firm says, I'm buying all this technology, all this software. How do I make money out of it?
That's a really good question. So in the clients that are more sophisticated, it's quite common to set up a quarterly review followed by an annual kind of strategy session. Typically, that can generate fees of around $5,000 per annum. We're value-based pricing here. That's probably for a maximum of 6 to 8 hours of work. So that's good rates by anyone's numbers. On the smaller clients, maybe it's an annual review. Maybe it's a $1,500 2-3 hour session where we set some strategies, we do some improvements. Right. Typical advisory firm, accounting firm is too busy. They don't want to work with this sort of work on every client. They don't want that kind of work on across the board. What they're looking for is good quality clients to do good quality work. How can they help those other clients? And most importantly, Where are the conversions? In other words, where are those small clients who should become better clients of our firm? So how can we take that business that's going places, through the power of one, show them how to improve? As they get more sophisticated and interested in their numbers through Cashflow Story, they can become bigger clients of our firm. And that's when we can get into the quarterly type reviews and things like that.
But Joss, just making sure I'm interpreting this correctly, Cashflow Story is very easy to implement. I would also assume that the people who are working in your firm, who have been to university to study finance and accounting, this would be a wonderful avenue for them to obviously express their education.
Exactly. We also pack the product full of assistance. We have every graph and picture has a story. We have an audio and a written version of that story. Our website is packed full of videos, training around the concepts. We have traditional help. We have user guides, everything to assist an advisor in becoming a storyteller.
Joss, okay, so I'm an accounting practice, I'm an advisor, a consultant, I want to get started. What do I do first?
Well, first thing you do is you sign up. Once you've signed up, I would take about 4 clients' financials and load them in. I would take a couple of the better, more sophisticated clients. I would take a couple of the maybe the smaller, somewhat less sophisticated. Load about 3 years of financials and look at the story. In 100% of companies, you will find something interesting to talk about. It might be red flags, red traffic lights that occur in chapter 1. It might be some issues with working capital in chapter 2. It could be funding. There may be positives. There may be some good things you can show the business, but the power of one will always have some things to show. The advice that I do give after working with accounting firms for a long time is think about the client that you're going to load. Don't necessarily take the one that you're closest to. Take the ones in the beginning that you think are going to have a rich story. So look at businesses that have working capital, importers, wholesalers, retailers, manufacturing, service industries that have work in process as a starting point. Even if the company has got less of those sorts of things, start with the easier ones. Go through the story, understand it, engage with the client, do it at their office, on the internet, on a laptop, on an iPad, on a tablet, engage.
So Joss, you've spoken a lot about the power of one, the code of the company, the hook for every business. What are the other hooks that you are finding that advisors or accountants can actually get more work out of?
There's a massive hook. So if we look at where the world is today, the baby boomers have reached retirement age. What that means is a lot of businesses are coming onto the market to be sold, and more will come over the next few years. There are too many sellers and not enough buyers. So business value is a critical issue these days. If I ask an accounting firm, yes or no, all your clients love to talk about value, we always get a resounding yes. The second question is, clients always overvalue their business. We always get a resounding yes. So value is a point of conversation with every client. In Cashflow Story, we can do a very simple valuation that enables us to have a conversation with their client about the value of their business. What we, of course, will find in almost every case, that value is a lot lower than they expect. That gives us the opportunity to help improve value via the power of one, because Cashflow Story will indicate the value improvement that those changes make to the drivers of the business. What this enables us to do is show our client that via a few small changes, they're improving profit, cash flow, and value. What we can talk about then is how we can work together on a journey to get the business to the value when they're ready to retire one day in the future.
So Josh, just as a summary, every person is saying can I improve profit, cash, and valuation? That's a pretty obvious statement to make. And as a point of credibility, the power of one has today been put in a book called Scaling Up by Vern Harnish. We actually co-authored the financial component of the book. This is a global bestseller in over 8 countries. And everyone is now realizing that you can do all the strategies you want, but unless you understand your cash flow, your profit, etc., the power of one, it can be an academic exercise. Would that be an accurate statement?
Yes, and the advisor's role is crucial in being a partner in that exercise. So going back to looking at the more sophisticated clients, it's obvious. They know they need to do this. It's easy. It's the other clients that need it but don't know they need it. So it's all about explaining to them in simple terms, not the why, because they're probably not interested, but the how, what you need to do to improve, and how, if they want to sell their business for 5 million in a couple of years' time, if it's only worth 1 and a bit now, what are we going to do on that journey to get there?
Joss, I understand if I was an accountant, why I would buy Cash Flow Story, why I would implement it. What are the other opportunities that are available using Cash Flow Story?
Well, there's 2 obvious ones. The first one is attracting new clients. So Cash Flow Story comes with some sample companies that can be used very powerfully to show a prospect the sort of work that your firm does. Imagine talking to a business and saying, we have conversations around value. We look at how you're going to get your valuation from there to there. That's the sort of conversation that can attract a new client and the right type of client. The other opportunity is any business, any client of yours that has debt, that has a relationship with a bank. There's a perception that says we shouldn't share our information with the bank. In all of our years of working with banks, we've learned that that is the exact opposite. The more we share with the bank, the better off the bank's going to be. Rather show them we have a problem and what we're doing about fixing it. So by generating cash flow story reports and sharing them with our bankers, we can enhance that relationship tremendously.
Wonderful, Joss. If I was in accounting practice, I would certainly be convinced. I understand your why being simplicity. We want every client to understand the numbers. Whether you're a sophisticated client, you will do the full 4 chapters, or you're more of an unsophisticated type of client. At least what I want to know is what changes do I need to make to improve profit, cash, and valuation. Joss, how easy and how quick is it to implement Cash Flow Story in the business?
Incredibly simple. We're accountants and advisors. We usually understand the numbers to an extent. It's simple to put them in. It's simple to go through the story. The consistent approach means that anyone in our organization is going to draw the same conclusion from the same information. It's about getting out there and engaging with the clients and talking about how they can improve their business. Because at the end of the day, who doesn't want to improve?
And I suppose, as you said, step 1, select a few clients who are going to be the low-hanging fruit to get your firm started.
Exactly.
Thank you very much.